Welcome back.
Doing this in person,
I
yeah.
know, this is exciting.
It's been, what, like a couple of years?
It has. We've been doing this over Zoom. I've been doing my own podcast, and you guys have been doing the NOB, so this is nice.
Yeah.
Back in the saddle again.
Yeah, does it feel better to do it live?
Ask me afterwards, but yeah, I think it does. I always thought it was easier to do things in person anyway, so.
Yeah,
you know.
yeah. It's a different vibe, different dynamic, right?
For
a little more
sure.
casual, not so
Yep.
pre-programmed, yeah. Yeah, I mean, you mentioned the podcast that you were doing. We had a show, podcast YouTube show, Profitless on Purpose, and you've been doing that show. But I mean, you started with Charlie and I. We started the whole None of Our Businesses. We started that years ago when we did do it in person, right? And then,
Yeah.
and then now here we are. We did during COVID. You kind of branched off to do the nonprofit show, and that really, I mean, it's a great show. I think, if people haven't looked at it, they should take a look on YouTube and or look up the podcast version on Spotify or whatever, because you guys really get deep and technical on nonprofit issues in that show.
Absolutely. We covered a lot of topics on that. If anybody's going to dig into the archives of the podcast, maybe not look at the first few episodes of Noob, but if they want to go back and look at some pop episodes, I mean, we've done everything from like what we're going to talk about today, grant management, but we've done topical stuff. In fact, kind of where you're pulling your questions from today, we did a whole episode on that, like a really kind of technical deep dive on what we're going to talk about. So yeah, there's some good stuff over there if people want to check it out.
Yeah, I mean, it seems like you have a real passion for managing nonprofit organizations' finances and helping organizations figure out how to manage their finances.
Yeah.
Where did that come from? I mean, what? Yeah.
Well, yeah, I spent so the first part of my career before I joined TCA, I spent probably 8 years in doing audits for nonprofits, and that's one of the things that came out from that was there are a lot of resources, but I never really found anything that like kind of encapsulated the real particulars about grants and nonprofit accounting themselves. Not that they're anything super complicated. It's not rocket science, but nonprofits tend to be more compliance heavy than say like a small business that's just trying to get their finances correct. So that's really where it came from, and then trying to provide a resource for those folks that have enough, maybe aren't at a stage where they would need like our services from our company, but would really need that kind of foundation that they can build off of for acquiring grants and dealing with restricted funds and stuff. That's kind of different from anything else if they just have a cursory view of accounting. That's really where it came from. And hearing from the community too that was such a need. I mean, I've done presentations for the Beaverton Chamber on grant management, and a couple other local organizations in the mental health field on grant management, and it always seems to be well received. So I think the need is there, and of course I'd like to help, so that's kind of where it came from.
You mentioned the presentations that you've done. I looked at the slide deck for the Beaverton Chamber, a presentation that you did, and then I know you kind of have talked about some of these things in the Profitless on Purpose show as well. So some of that information is in there, as well as that presentation that you did for the Beaverton Chamber. I mean, you're delivering a lot of expertise to audiences in those presentations that you do, along with consulting for clients on some of those issues as well.
Yeah.
You mentioned this a minute ago about being a prior auditor, but tell me a little more about how you cut your teeth on gaining that kind of experience and expertise.
Sure. So when I got out of college, in fact, that's how Ty and I met. I got my undergrad degree. I was like kind of an untraditional student. But when I came out, I didn't really know where I was going to go. And when you're coming out of college, they always say public accounting is like a great place to, like you said, cut your teeth. I got on with a kind of a smaller firm and they specialized in nonprofits. So I probably did like 100 audits a year. We had kind of on the smaller side, but some large governmental entities.
A lot of organizations to be working with.
Yeah. And so we would crank through nonprofit audits, and that's kind of where I cut my teeth, and intermix in that with some for-profit stuff and some tax returns. But that's really where I learned my kind of foundation on nonprofit accounting, was being an auditor for those folks for 8 years. It was like drinking from a fire hose at first, but you kind of accumulate. I didn't realize it until after I got out. You kind of accumulate this wealth of knowledge that I wanted to share. And so that's really where it came from. And that's how I got into the nonprofit space. And saw the need there and continued to deliver even after I was out of that space as an auditor. And like you said, working with clients directly or sharing my knowledge through different forums, either through the podcast or through presentations in person.
I want to kind of reference that presentation that you did for the Beaverton Chamber on grant management, because thinking about all the nonprofits that you've worked with as an auditor, and then now you serve organizations you serve an audience of nonprofits, or those interested nonprofits who kind of see the show and the presentations that you've done, and as well as clients at TCA that you've been working with. So you've got this kind of varied experience with nonprofits, and the question that came to my mind, that presentation was about grant management, and so the first thing that I was curious about is how, when you think about the issues that nonprofits face, where does that rank? Like the management of grants, is that like a priority topic, or is it kind of one of many, or how does that rank in terms of important things?
Well, that's a good question. I used to be like a kind of a math nerd. And I think the reason why I liked math so much is because if you knew the overarching kind of rules, you could apply it to whatever that math problem was. And so that's why I think accounting was kind of interesting, because if you know the overarching rules, you can apply them to a lot of different situations. You just need to know the overarching rules. And how that relates to your question is, if you know grant management is kind of the highest level of managing restricted funds or dealing with, different compliance issues. So if you can master that, you can master like restricted donations very easily as well. I mean, it's a very applicable kind of skill set. And even more so if you're in a for-profit setting, if you know grant management, you can kind of weasel those things into compliance issues in a for-profit setting. So if we're talking about like stack ranking kind of what nonprofits struggle with, I would say grant management is up to the top there, because there's a lot of complexity around it, and trying to demystify it a little bit was kind of my goal. And I get asked a lot about grant management, before I put these presentations together, even started talking about it. And so it can be overwhelming. If you've ever looked at like a governmental grant or a state or county grant, there's a lot of wording in there that's required. You're reading through a dense government written document, and so trying to understand it and understanding a baseline of how you can have the information available for somebody when asked, because they'll ask eventually about it, and setting yourself up for success that way, I think is where that came from. So that, I would say, that ranks highly on a nonprofit. And from an accounting standpoint, if you want to talk about how it ranks in an organization overall, an HR person might say something different, that maybe DEI would rank higher, or that needs to be a forefront in a nonprofit thing, or development director might say fundraising and personal giving, or like continuing gifts or something like that would be important. But for me, if you understand grant management and you understand how restrictions and compliance work over a grant, then you can kind of apply it over the entire fiscal system. And for our for-profit friends out there, you can use it. You can take those skills and kind of weave them into a for-profit way, where you can, like, department spending is one way, which matches very closely to like allocations for grants, allocating expense, or compliance. I mean, if you're working in a controlled substance area like marijuana or alcohol, you can take those same kind of compliance steps of understanding what's required of the organization from an accounting perspective, and then making sure that your accounting system is set up to spit out the compliance portion of what you're under. Can really help.
I thought the presentation and the slide deck itself was a pretty good primer for somebody like me who has an accounting background, knows a little bit about nonprofits, but I'm not a nonprofit accountant, and so I thought it was a pretty good overview. And so for our audience, we have a link to that on our website that we'll put in the show notes for people, so they can go see what we're talking about there. A key part, you kind of mentioned this in what you were talking about a second ago, but a key part of your presentation was the role of accounting in grant management. And it kind of made me wonder, can an organization, in your experience, what have you seen in terms of, can an organization that does not have good accounting, can they get grants? And then even if they do get grants, can they maintain getting grants going forward? I mean, it felt to me like accounting would be a prerequisite to being able to do this as an organization, but I also know that they've got pretty limited resources. So I'd love to hear what you what you have to say about that.
Yeah, there's a lot in your question there because, well, first to address, can you get a grant without good accounting? I'm sure you can. Grant management is just like a relationship management, and in the news, unfortunately, we've seen horrible nonprofits be able to bring in lots of money and then get called to the table on it if they're not using it correctly. So you can secure a grant, especially in the funding environment that's in nonprofits right now, because mental health and houselessness and all these things are top of mind. The answer from a state and governmental level is like, let's push what we want to fund these kind of programs. So if you're in that space, there's a lot of money available to you now. And those governmental entities are very willing to, you can put a good proposal on the table, you can get the money. Now, the after side of that is if you don't have good accounting to track that kind of how you spent the money, how you're allocating your resources, expenses into those grants, and really identifying and having a control system set up so that you can show somebody that knew about the expense approved it and it went to that program and this person's hours went to that grant. If you don't have that, what ends up happening is these funders will come back and audit you or ask for documentation around that, or you have a fiscal audit yourself. And if you have findings around that stuff, you can not get further grants. You might even have to pay money back. So there are ramifications to not correctly having an accounting, a good accounting base for your organization. But you can most definitely get grants and funding without it. It's just the backside of that is you're prolonging the pain because you're going to have to pay back that money. And in auditing, I audited people that ended up having to return money. It's a rare occasion, but if you get the right government agency that audits you and finds question cost or something like that in a grant, you're going to have to give the money back. And that's hard for small organizations. A lot of these grants are cost reimbursement where you have to spend the money up front, and then you're only receiving maybe 10% to cover your administrative fees. So like your executive director, your accounting department, HR, those kind of things are funded by unrestricted grants or administrative overhead. And if you have to give back that money, that's really difficult on an organization. Mm-hmm. In fact, when I was in auditing, it almost sunk one of them. Luckily, they were able to limp it along, and they're doing great now. But it was a hard lesson to learn. So another motivation to put this out there so that people are aware. If you don't do these things, there's real ramifications that happen from this.
Yeah, I mean it kind of sounds similar to the for-profit world. You can operate a business without good accounting, but it creates deferred problems that you have to deal with at some point. Yeah. So in the presentation, one of the things that I learned looking through it was just the diverse types of grants that there are. Like grants are not all one thing. There's different grants depending on the funding sources and so on. And then in the presentation, you went on to talk about if you take those different grants, because they operate differently, they have different contractual requirements, it shouldn't be surprising to us as accountants that there's different GAAP accounting for those grants in terms of how the income from those grants, so to speak, gets recognized. And GAAP for our audience, generally accepted accounting principles, kind of similar to what we're talking about, good accounting, bad accounting. I wouldn't say that it's bad accounting for an organization, particularly a small one, not to really know the details of GAAP. Yeah. And so it made me wonder, looking at that and these different GAAP requirements that you would apply to different organizations, what's your view on what does it take for an accountant in a nonprofit to get up to speed and actually be able to properly account for their grants? Is that something that an internal accountant could do with a reasonable amount of training and support, or is it something that would always require outside experts? Or
Sure. So no, I think it wouldn't require outside experts, but trying to go it alone is very difficult, right? What you're really trying to do, and for our for-profit people out there, is you're really trying to determine like money coming in and money going out for a certain department would be kind of the amalgamous to for-profit. In a nonprofit, where what you really need to know is money coming in and money going out for specific grants. because you're going to have to report on them like that. And, there's different flavors of grants, so the accounting treatment differs from grant to grant. For instance, a cost reimbursement grant is exactly what it sounds like. You have to put money out. Once you put it out, you tabulate, how much you did, and then you submit an invoice to recoup that money. So there's a cash flow thing that happens there that can be difficult for people to wrap their heads around. Great, we got more grants, but much like the expansion of a for-profit business, to make money, you have to spend money. And so, there's some ramifications there if you're not planning that I think maybe a lot of internal accountants don't think of if they're just accounting for grant expenses and, churning along the compliance portion. But there's also, a training thing. You have to, like I said earlier, these grants are, it's not, just an IOU or something. There's a lot of compliance that goes into it, allowable costs. So having somebody that can read through that and understand the accounting ramifications of what they signed on for can be difficult. I mean, it's not a secret that nonprofits usually don't pay as highly as like a for-profit or an industry kind of standard. They're getting better. There's things in place. So the amount of talent pool that you're pulling from is kind of reduced in that area. And a lot of people go in, because that kind of work tugs at their heartstrings, and so you have somebody in an accounting space that maybe hasn't educated themselves enough to understand what's going on at times, but I've seen really, 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 really talented accountants in that space. So you can definitely do it on your own. But I would say there's a lot of resources out there for nonprofits. I'm not the only one that espouses, good at grant accounting and stuff. So your auditor is a good place to look, if you have an audit, ask them questions mid-year. They'd much rather tell you how to do something than to have a finding when they come out,
Mm-hmm.
So that's always a good one. Actually, the people that write the grants and give you the grants, those are really good people to discuss with. Again, they want to know about any hiccups or anything like that along the way. They're there to help you. Governmental agencies don't want to take money back. The way governmental accounting works is once they give it to you, you better spend it. There's no carryover to next month or something like that. They want you to spend that money. So I think there's resources. I think you can do it on your own, but definitely reach out, make sure that honesty is the best policy. Being transparent with what's going on, I think, would be a good place to start. And there's lots of free resources out there on how to manage this stuff. So we're not the only space for it.
And I think I caught this in the presentation, but I'd love to kind of maybe hear you expand on this point a little bit. Does a nonprofit, in your view anyway, do you think that they need to follow GAAP, strictly speaking, on their monthly accounting procedures? It's evident to me that there's reporting requirements for these grants from looking through your presentation, and then in a lot of cases these organizations get a year-end audit, so they're eventually gonna be on GAAP, at least for an annual financial.
Sure.
But like in the for-profit world, even if a company is going to be finally on GAAP when you kind of close the books at the end of the year, we might roll with something that is kind of GAAP, but not entirely on the monthly close. Does something like that happen with nonprofits?
Yeah, absolutely. A big one is tracking restricted grants. And there's a way to do it using deferred revenues. The GAAP way of doing it is once you've signed a restricted grant, you have to recognize all that revenue all at once. And then the board's like, oh my gosh, you have so much money, let's spend it. Realize it's earmarked for 3 years. And so one of the strategies behind showing kind of not a cash basis, but more in line with what really happens, and opposed to the way GAAP wants you to treat it, is to use a deferred revenue account, for instance. That's not GAAP. It acts like deferred revenue, but that's not the way that nonprofit GAAP wants you to account for it.
I see.
So you can track it using that, and then when you're delivering your board reports or you're reporting on grant, the actual revenue and expenses that you've used out of that grant, it's much easier to release from deferred on a monthly or quarterly basis, so you can see it from a real-time kind of cash flow perspective of how much of the grant restrictions have been satisfied during that time. But it's not GAAP, and you would have to make an entry or have your auditor make an entry to bring it up to GAAP at the end of the year. But if you follow GAAP, it's going to be confusing, or you're going to have to do a lot of explaining to the board of okay, I know, there's 300,000 there, but that 300,000 has to last us 3 years. So really, this year we're only scheduled to spend 100 grand, and that's why it's in deferred, so that it kind of shows up on the balance sheet as opposed to just being dumped into the income statement.
I see.
Flush with cash.
There's a lot of parallels I should say. I see a lot of parallels here between what happens in the nonprofit world and what I'm more accustomed to in the for-profit world.
Mm-hmm.
If Ty was dumped into a nonprofit tomorrow, just dropped in and said, okay, you got to manage these finances right away, what I'd be tempted to do is analogize a lot of the situations to things I'm familiar with in the for-profit setting. And I think about like the comparisons or the parallels. One of the things that stood out to me that seemed like that was when you talked about managing relationships for grants, that the grant application process really should be about managing relationships, and that's going to make the whole process go smoother. And it really sounded very familiar, like managing the sales cycle in a for-profit and managing your customers and building good relationships. And so do you think I'm on the right track there in terms of that parallel, and maybe you see other parallels related to grant management that you could throw out?
Yeah, absolutely. I mean, the relationship management there, often people look at especially small nonprofits, look at grants as this holy grail of funding, amalgamous to like a for-profit, diversifying your revenue streams, multiple revenue streams come in. The same is true for a nonprofit. There's many organizations that are just grant driven, but I think that's a weakness. If the governmental or county agencies kind of dry up in your sector. Right now I mentioned there's lots of funding for mental health, houselessness, but if that becomes out of vogue kind of in the philanthropy area, your funding is going to drop if you're over kind of leverage, for lack of a better word, in that space. So you got to kind of have donations, fundraising events, and long-term giving mixed in, maybe with your grant to be the most healthiest. That would be a good thing to start. But often people look at grants as this holy grail of you're filling out grant applications and you get one, and it's like a windfall, like winning the lottery or something. And that's not really the way it works. These are all relationship driven. A lot of the organizations that I work with, they get continuing grants from the same counties because there's a relationship there. They know that nonprofit does a good job doing this, and we have a new program. We need to give some money to sponsor this new program or whatever. Hey, we know who can do that. Hey, would you guys apply for this grant? It's very much a relationship driven thing. Also, the back and forth I talked about in trying to understand grant accounting or having questions, that relationship, there needs to be an open line of dialogue and a relationship there between grantor and grantee. Yeah. And so other kind of similarities would be the way cost or expenses are allocated. I've mentioned it before, but it's very much like a departmental budget although allocating overhead is different in a for-profit. You're who can absorb it from which department. It's much more prescribed in a nonprofit setting on how you can allocate administrative or overhead costs. So, but the concept is the same. It's just a different percentage of allocation or how you do it. But yeah, it's very similar.
In the nonprofits that are funded with grants like this, do you need specialized software for that?
I mean, I haven't found a good grant management software that I like. They're expensive. I hate to keep comparing for-profit and nonprofit, but much like not budgeting software, for instance, it's out there. It's great when it works, but there's so many variables in the grant management process that I believe the best way to do it is Excel. If we're being completely honest, a mix of Excel and your accounting system and marrying the two up.
Yeah.
And doing budget to actuals after the fact and seeing how much runway you have left on your grants and having a restricted tracking kind of sheet of when your grant started, when it's going to end, how much you spent to date, that kind of thing. I think it's much easier to manage that in Excel than to try and find an off-the-shelf software that would work for you.
Yeah, that is very much like the advice that I'm typically giving in a small business scenario is you can usually use a regular kind of off-the-shelf accounting software and then a hybrid with Excel. And I think that raises kind of the next question of at what point would the situation warrant getting out of Excel? If you're using, I know in the for-profit world, it's well, I would use, let's say, inventory accounting. I would use Excel to start out with, but there would be a threshold at where it's like, okay, there's too much data here to be doing this in Excel. We got to start using a software. Is there a corollary to that in the nonprofit world when you've got grants?
I would say the corollary is probably medical billing, just because if you have a nonprofit that works with like Medicare or Medicaid or some kind of medical, you're taking medical insurance, think of like a rehab center or some kind of like medical thing where you're billing Medicare or even just regular insurance. That's so complicated, and that is such an industry specific like bottleneck of that. And that's where you would need specialized software, just because of the fact, you have these contractual write downs. You need like a 5 to 10 person billing department if you're in that space, and you probably are, well above, 20, 30, 50 million in revenue at that point. If you're doing something like that, it's quite the undertaking in that medical billing thing. The other thing would be if you're in that low income housing space and you're churning new developments. It's a lot of like bridge loans and construction costs and that kind of thing. You might then look towards specialty software there. But I've seen really, really complex like nonprofits that are well into the 50 million still using QuickBooks. So it depends on the complexity of what you're doing. And I've seen nonprofits try to make the jump to specialized software. I had a client one time that had to write off like $75,000 worth of software cost because they went to Blackbot and tried to get like a really fancy customized thing, spent 2 years trying to do it, and everybody threw their hands up and they had to write it off. And so, I think if you're going to go down that route, I mentioned in the presentation, you need kind of everybody involved. The horror stories that I've seen with customized software is when the accounting department is ignored, or development or grant and program managers are ignored in trying to get specialized software, and they're kind of railroaded in by a consultant or something into something, and it's never a good look to have to go down that and lose that much money on something that's not going to work out in the end. So take your time when you're doing those things. I guess is what I'm saying.
Kind of a different question in terms of financial management. I wanted to just ask how being funded by grants can affect day-to-day cash flow management, and the nature of my question, or the motivation behind my question, is what you were talking about earlier, the scenario where you might get a grant that's supposed to last for a few years, but the organization should know that it's supposed to last for a few years, even though they got it now or whatever that is. Is that an issue? And do you see that a common issue? And then how do most of these organizations handle kind of plotting out their cash and making sure they have what it takes to pay their bills and so on?
So I have seen organizations have like a separate bank account where they keep like restricted funds, and they essentially transfer it over once the funds are unrestricted, to make sure that they don't run out of that restricted money or find themselves in a cash shortfall if they've been granted like a multi-year grant. Usually grants are pretty good if they're multi-year and they're giving you money up front. They'll give you a chunk, and then you got to reach a milestone or a reporting phase, and then they'll fund the next year. So you have a receivable that sits on your books, but you don't have the cash in the bank yet. So that's one way that they kind of make sure you're not buying Lamborghinis and building a new, office with their money and then saying, hey, we spent it. But the other thing that we talked before about cost reimbursement grants, I see it often where they're very excited to start this new program. You're going to have to hire 20 people. They go through the proposal process, get the grant, but then they don't realize this is a cost reimbursement grant. We're going to have to like drain our cash flow to be able to pay the first payroll before we can even submit for reimbursement. So one of the things I recommend for clients, and I've said it many times on NOB, is ask for money. It doesn't hurt to ask, can we have some upfront funding to cover those costs? That we're gonna have a cash shortfall. But if there's one thing that I think nonprofits like kind of lack, is like a cash flow planning model or understanding how their cash goes in and out. It's always an emergency when they see the bank dwindle and they're like, oh my gosh, how are we going to make payroll, start issuing invoices? So it's something that I think needs to be talked about more in the nonprofit space, is like planning your cash flow, understanding what your cash flow is going to be. A lot of time is spent on compliance, A lot of time is spent on allocating expenses and budget to actuals and stuff, but taking it to that next level of planning for cash flow is something that I rarely see, and I've rarely seen it in all my years. So,
Yeah. Well, I get the sense we're just scratching the surface of kind of what you know and the information you can provide. So I think we should do this again. I mean, you've done some other presentations. I think we should get back together and share with our audience kind of some of the other knowledge that you have there, some of the other thought leadership that you can provide. But the most important question of the day is how's the whiskey?
delicious.
Yeah,
This is a good one.
yeah. This is the
Chardonnay.
yeah
Right?
the Chardonnay cast from Westwood. Yeah, I
Love
like it. It's good. Yeah, yeah. Now we're not sponsored by Westwood, just big fans. but yeah, it's got its own flavor, doesn't it? Yeah.
Very different.
Yeah,
Yeah, I like it.
That's great. Well, yeah. Let's bring our panel over here, and we'll let them take a crack at you
Sure.
for a little bit. Yeah.
Okay, well, yeah, we're all here. The gang's here live, and with us now are on our panel. We were doing the interview with AJ Wheeler and I. I'm Ty Carr, and with us on our panel here, Tammy Hess.
Hi.
And Charlie Zigman.
Hi, everybody.
And so, yeah, Tammy and Charlie, they were kind of hanging out in the audience in the back listening to AJ and I talk, and I thought it'd be great to have them kind of come up here and weigh in on some observations and just, grill AJ on the things that they heard that they thought that as an audience member, that they thought would be interesting to get more info on, or just check some observations that they might have had. So maybe throw in wherever you guys.
We need an interrogation light, on whoever's sitting in the middle.
Well, get ready for it because I have my first question already. Yeah. You ready? All right. So the first one is, you're talking about cash flow management and how you don't see that a lot, right? Which if a company or a nonprofit organization doesn't have the cash reserve in place and they have to spend the money to get the money. One thing that kind of came to my mind was, what about banking in terms of getting loans or type of funding for a nonprofit or a brand new nonprofit?
Yeah.
I thought you could expand on that a little bit.
Yeah, it's very difficult actually, because if you think about getting credit from a bank, usually they want a personal guarantee, right? They want somebody with a social security number on there. And so it's very difficult because, or like the owner, like when they're talking about a business, when you're applying for a loan or a line of credit or even credit cards, it can be very difficult because there is no owner of a nonprofit, right? It's for the public. There's no retained earnings, it's net assets. So that can be very difficult. So you got to look for a bank that works with nonprofits and knows them. Like locally we have some, and usually credit unions are a good place to start and ask if they have like a nonprofit kind of thing. But to your point, Tammy, it is very difficult for bridge funding. Like we talked about the reimbursement grants where you have a lot of upfront costs that you can't get paid until after you spent the money. So it's very difficult for that kind of funding for cash flow bridges and stuff. It's not impossible. I mean, there are plenty of nonprofits with lines of credit and credit cards and such, but sometimes especially a startup nonprofit, a very small nonprofit, oftentimes I've seen board members have personal guarantees for credit, and then later on that board member leaves and they don't realize they're still as a guarantee on the line of credit, and so it can be difficult. You really have to work hard to be able to get that kind of credit and funding.
Yeah. And what makes, because that makes perfect sense, and that's what I've seen in my past as well. And you would think that with organizations that don't have access to funding, that cash flow management would be number one in their their priorities, because nothing is worse when all of a sudden, to your point, you can't make payroll, and then what do, right? And if you don't have anyone on the board that can either give the money, because I've seen it where sometimes people have loaned the money in that sense in a very short term type of situation, but I don't know if there's a way to encourage nonprofits to really think about that cash flow management and funding side, because I think that's where it could really make or break an organization.
Yeah, I think, we haven't talked on this podcast, but on POP we've always talked about what does an operating reserve look like? How do you get there? What do you use for metrics to try and base that number off of? And so my kind of rule of thumb is 3 months operating costs, and that includes having to lay off program staff, because presumably if you just need enough for development and just to keep the lights on kind of thing, that's where kind of that comes from. 3 months is kind of bare minimum. I would say 6 months is best, but I mean, that could be upwards of like $100,000 for depending on the size of your organization. And that can be hard for a nonprofit. It can take years for a nonprofit to be able to stash away that much money. So it is like this balancing act of spending enough and saving enough and having the cash flow available or the line of credit or the maneuverability to do things without having to always have a grant or a donation to do so. And so I'm surprised that we don't see more like thoughts around cash flow management. But the simple fact is that like even in the for-profit business where we would expect to see more of that because oh my gosh, how do we expand how do we use our cash wisely? It's just not thought about enough. You can get to the point there's all these things underneath it I think that have to be done before. And so to reach that point you have to be a really mature and wise kind of organization to understand that. And unfortunately a lot of them don't make it there. They get to the point where they can manage the day-to-day and report on it, and then that's like the top of the mountain for them, where there's more you can do.
See, that's kind of my question is, I know that in a lot of nonprofits, they're focused on getting the funding and that's how they, operate. But I know that nonprofits also have some operational things that they do. I know like here locally we have Free Geek and they have like a store that they do sales in and they'll take grants and things on the side, but they try to do things to operationally help cash flow. Do you find that a lot of nonprofits have a strategy that is geared at avoiding the whole funding challenges and trying to just operate in maybe a nonprofit space, but with a more operational mindset about how they actually pay for everything?
Yeah, you mentioned Free Geek. Free Geek is, and we don't work with Free Geek, and I never audited them or anything like that. But Free Geek, I do know about Free Geek, and they're unique in the space where they don't rely on grant funding and like straight up donations. Their whole operation is funded much like a for-profit kind of selling trinkets. They take in donations. They want you to reduce your e-waste. They bring it in and then they resell it or give out Linux-based, laptops that are refurbished or whatever. They're able to sustain their payroll, their business through volunteer hours and through being able to have a retail kind of setting. And so, but that's unique. To your point, development departments, grant writers, those are like the flashy things that usually nonprofits like pay for outside consultants on. And it works to varying degrees on how successful that is. The most successful nonprofits I've seen write their own grants internally and they include other departments in doing that. And it's not a siloed consultant kind of role there. Works sometimes if you have somebody that has lots of ins, but it's never long term. That would be like a short term stopgap. But Tammy talked about like an operating reserve, having the cash flow available in an operating reserve. Having a good development department that sets you up with diverse revenue streams is one way to do that. Or having a nonprofit model that doesn't rely on donations and grants, which is very rare. Free Geek's probably the only organization out there that I know of that they're not the only one. They're the only one that I've heard of that has that kind of model. So it's a unique organization, and that's not the norm. So it is like counting your pennies and being good with them is really
Absolutely. And I've heard of some struggles that they've had trying to keep that model afloat and whatnot. And so I know that it's not without peril to try to go that route. Just seemed like, one of the ways people try to get around that.
We talked earlier when Ty and I were talking about diversifying revenue streams, not fully being just grant funded, but having donations behind it, not being fully donation driven and having some kind of like grant and savings. When you set yourself up like that, like in a consumer-based economy like we are, if people aren't buying things, you're not able to support your organization by just selling things out of a thrift store. And many organizations like in the mental health or addiction and recovery space, what are you going to sell? T-shirts? You can't fund the whole organization on T-shirts and keychains. So what do? You're going to have to ask for donations and grants in that case.
Do you think in terms of that, it was just the diversity part of getting your diverse revenue source or funding source is really key, obviously, and really important. And as you guys were talking, I was thinking about the fact that does it take different skill sets to go after that money? Because when I think of like going after a grant, for example, or a contract or those things, usually you have a grant writer or someone. It's a different type of relationship and
Yeah.
skill set, right?
Yeah.
And then like if you're a fundraiser and you're trying to do not blanket donations, but donations that aren't
Sure.
tied to a contract or a grant,
Sure.
that takes a different type of personality and skill set as well. So I was
Yeah.
wondering, is that why it's so challenging to sometimes diversify your revenue and trying to go after different sources of funding or cash?
Yeah, great point, because they are vastly different skill sets. Well, not vastly different. It's all relationship driven at the end of the day. But the grant, you can have a great relationship with your grantor, but write a really horrible grant application, and you're probably not going to get it unless you got a really great relationship. But to the other point, right? If you don't have a relationship or you're not interpersonal, that donation driven thing is very one-on-one. You're asking Mr. Moneybags for $100,000 to cover your new capital campaign. That's a very different skill set than getting with your program staff and putting together a killer grant application and having at least a cursory good, kind of relationship with the grantor. They're very different skill sets. Development departments are often seen like hired guns, come in and write grants for us and we'll just leave you to it. But it doesn't work that way. You really have to include program staff in that grant writing process. You have to include administrative people to understand, of course, the finance department, but also HR and all that to understand what kind of upfront hiring costs are going to be behind that if you're hiring new people. So it's a holistic kind of thing when you're writing grants. And I think often people think of it as like a check the box. If we just put out 100 grant applications, then we get 2 back. It's a numbers game. It's like sales or something. I'm in it for 98 no's and 2 yeses. It doesn't work like, you can get lucky, of course, but it doesn't work like that. And I think the same's true with like donations. And even then, you look at donations versus like successful like galas or events. Often people are like, well, we'll just have an event. And don't understand the planning and the cost that goes into that, and it's draining. You're lucky if you make 10 grand. You may have bought in 100,000, but the food, the entertainment, the raffle item, all that stuff adds up. People think we'll just have a gala or a fundraising event.
Or on that one, I've seen people who they don't think about who they're inviting too, right?
Yes.
So you can have a gala, an event, and you're trying to fundraise, and then you're maybe not bringing in the big dollar investors, and it's for the community or it's for the other, which is great and provides awareness. But if your goal is to earn $1 million from that gala, but you do not invite like companies or big philanthropy type of individuals, then you're not going to make it that far.
Yeah. I think to your point on that, we could do a whole episode on that. On just like making sure you're inviting the right people and you have the right branding or goals inside around that gala. If it's just to raise awareness or just to put your name out there as like an advertising function, sure. But if you have the idea that it's going to be an advertising function and a huge money maker, and to your point, you're just bringing in eyeballs onto it and you're not bringing in people with enough money in the bank, zeros behind their name, it's not gonna be successful. And you can't have a gala or something or any kind of fundraising endeavor that's supposed to be like the jack of all trades.
Right.
You have to be really specific and hone in on that.
Charlie, I bet you're kind of similar to me. You probably saw parallels to some of what we were talking about with kind of the for-profit world that we normally live in.
Absolutely. There are a lot of things that you were saying that seemed like they were for not for profits, but then I was thinking about my experience and had ran into many of these same kind of concerns. So one of the ones that came up for me was you talked about porting on your grants and being within kind of what you've guaranteed. I know that in some of the for-profit businesses that I've worked with, porting to banks when you have loans and having covenants and promises that you've made that will kind of drive what is supposed to happen, and then you have to report on, hey, did that actually happen? And then dealing with the consequence of that is one of those parallels that I've seen. Have you seen a lot of the similarity between the businesses, non-for-profit businesses, and the challenges they run into with for-profit businesses?
Yeah, I think some of the challenges there are like, you mentioned covenants. There's grant requirements there that, nonprofits also too, we talked earlier, when they do have lines of credit or something, usually there is covenants written in there, so they come across that same kind of challenge. A debt to equity ratio that needs to be this, or current asset ratio that needs to be that. which for a nonprofit, I mean, if you fall beneath those covenants, yes, you become immediately, they can call your loan or whatever, but they usually give a little bit more like leeway to nonprofits because they don't want to be seen as the bank that calls their line of credit to a church or a nonprofit. That's not great headlines, but you are you're not in line with your covenants, you face the same kind of repercussions that a for-profit business would. But as far as the compliance portion around that, like amalgamous to that would be grants have allowable cost. A lot of federal grants, you can't charge alcohol to them. So you better not be having beers at your board meeting and have somehow try to write this off on a grant. This would not be, no.
This whole nonprofit thing sounded worse and
TCA
worse.
is not grant funded, so we're okay. But yeah, this would not go on the foot the bill. But I've seen weird stuff written into grants. You can't have professional services. Usually my bill is racked up because I'm helping all grants equally. So our bill gets chopped up along all the grants, and they can make the justification behind that to say like, but then other organizations see us as strictly an administrative cost, so they'll put it there. But like you could have two grants from the same county, and they have different requirements or unallowed costs. So you could have one that doesn't allow insurance. I've seen that before. And you have 3 other grants from the same county that allow insurance. So it's really reading through those, understanding your requirements, understanding the compliance behind it, and not getting caught with your eyes closed on it, because they'll take a look at that stuff. And if you happen to have a line for like food and drink, for instance, that's a big no-no on like usually federal grants. For whatever reason, they don't like to pay for food and drink. And so understanding those and reading through the grant contract or the grant document itself, and if you don't understand it, having somebody explain it to you, like we talked about earlier, your auditor or the grant liaison that you have is super important on that.
Have you ever had that cause problems if an organization tries to switch gears at all? Because I know in the for-profit field, when things aren't going well on a certain thing that they're trying to do, it could be the case that company repositions what they do to react to some challenge they see in the market. And covenants with the bank and whatnot, you're always focused on the financial metrics and being within those, but you still have a lot of freedom on what you do operationally. I could see how a non-for-profit could get it set up with a grant that pretty much pigeonholes them into doing a certain task, and then they try to pivot and they can't as a result of that grant. Have you ran into that?
Yeah, I think I've seen it. I mean, where they try to fit a square peg in a round hole, so much as, like, to use a bad analogy, but it's the best grants that are written are I don't want to use the word vague, but they're broad enough to where if you have there's 2 different things. If you have an already established program, you're writing a grant to cover that program, and maybe you have multiple grants that cover that program. I've seen that work where you're broad enough. The risk there is that like you're double dipping on expenses. You have just this broad program that you're tracking, and you have 2 or 3 grants covering it. Do you really are you really allocating everybody's costs across those 3 grants, or are you double dipping on their expenses? That's one kind of like red flag for somebody that would be looking at it. The other thing would be if you have specific grants that are for new programs and you find that program or that initiative failing, going back to that's a much easier situation where you can go back to the grantor and say, this isn't really working. Usually the grantor will be like, we'll play it out, and at the end tell us what we can do better, and we'll try this again. Because if they signed off on it, it's something that they're going to want. What doesn't work is just sticking your head in the ground and being like, we'll just run through it and hope nothing happens. It's never a good look in accounting and anything, I guess in anything you do. But I've seen it happen before where they're just like, yeah, it wasn't working out, so we just plowed through and we got the money and we should be good, right? No, quite the opposite here, buddy. Like, so yeah, understand. It all goes back to having the people that are going to run the program or the grant that you're applying for, or the program that you're initiating, having them on board with writing the grant and understanding what they're doing is setting yourself up for success. But at the end of the day, you're going to run across situations where sometimes you roll snake eyes on a program or something like that. So you go back to the drawing board, you go back to the grantor, you see if you can't reallocate that money. The big one is, this happens a lot, believe it or not, is you write a grant, say it's like a 12-month grant. You get to month 11 and you're like, we haven't spent enough money. We weren't able to hire people quickly enough. Well, what do? like I said, the governmental unit doesn't want to take your money back. You just ask for an extension. It's called a no-cost extension for a reason. You go back to them, and they'll give you time to spend that down. What do you need, 6 months? Take it, So, that's... And if you don't have a good relationship and you stick your head in the ground, they're going to be like, why didn't you spend your money in the time? Give it back. That's when they will make it, you give it back.
That makes a lot of sense.
Well, hey guys, I think we all have to get back to work, unfortunately.
Really? Oh.
Yeah. I don't know. Are we going to get back to work? But yeah, we're going to reconvene this panel and do this again. Both get AJ to talk more about nonprofits, but we've got a lot of new topics coming on. It's a new year, a new program. We're getting at it this year, 2023, right?
Yes.
Yeah.
Absolutely.
All right. Well, I'm glad you guys are at the table with me, and I'll see our audience next time.
All right.
Thanks, everybody.
Thanks, everybody.
Bye.